Hello traders, this is Rich from Tradesight. This is a look at the market preview for the coming session. This is going to be for Wednesday, August 28th, 2013. We had a pretty weak day today where we had all the major averages closing lower on the day. We had the complementary and expected weak internals. We had about minus 1,800 issues on New York, minus 1,900 issues on the NASDAQ side, and the New York trend closed up at 2.65. The high close in the trend is definitely notable, but certainly well below that which we'd expect for a relief gap to the upside. Usually you get the relief gap the next morning to the upside when you close at 3.0 or higher in the New York trend, and we did not have that for short today. The put-call ratio closed higher on the day by 20 cents up to just under the 1 level, and we'll take a look at all these market internals in just a little bit, but first let's take a look at the ES futures. Alright, so here's a look at the ES futures. You can see that we gapped substantially lower on the day and made a new low on the move. This is kind of a fall away breakaway gap. It's actually the second of the series. The first one was back here quite a bit earlier, about a month ago, and we dropped down again now to expand the range to the downside. We interacted with this 1625 area today. That's going to be very, very important because that's the 4/8 line on the Murray Math box. Starting to get some distance now below the 10 EMA and more importantly the 50 DMA. So this reversal in trend here has definitely proved itself to be at least in the short term and intermediate negative bias. So we'll have to keep an eye on this. Key levels below. Obviously, the 1625 area is going to be very key. Next level is about 1609, 1610. If we reverse back to the upside tomorrow, overhead, the day's high is going to come in play at 1645, and then the gap fill is going to come in at about 1654. All right, so moving on to the NQ futures. Here are the NQ futures in the daily time frame. Done something a little bit different today for a change. What I've done is I've added the pressure thresholds for the daily bars here. And what we get here is we get an upper pressure threshold, which is the red line, and a lower pressure threshold, which is the green line. We call them the PT. So this is the LPT here, the lower pressure threshold, which is this green line. When we gap below the pressure threshold and are unable to recoup it in about the first 15 to 30 minutes of trade, what we consider is that our pressure thresholds have shown us that the market is substantially weak and will not fill that gap. They're kind of like gap fill thresholds, if you will, and we definitely open below the pressure threshold, or in another way to say it, the gap fill threshold, never recouped it. And you can also see how even though we opened here on the day at about 3,086 in the NQ futures, you can see that when we did try to rally up, how that pressure threshold was the key resistance spot on the day and stopped the advance before ultimately taking out the opening price and then proceeding lower. If I can turn your attention back here a little bit, we had another instance where this came into play. We had a nice up day here. We had a change up day following that to the downside here where we used the LPT but held that as support. The subsequent day we gapped significantly below the pressure threshold. So immediately, even though we had a gap, we were not looking for the gap to fill. We were looking for that gap to be a gap and drop day where prices actually continue lower. So these pressure thresholds are something that are provided to our future subscribers, and then we also post in the Trading Lab every day so that our subscribers have a better handle on what the expected trading range of the day is going to be. And if we exceed that with a gap in either direction, this proprietary tool will kind of give us a guideline and a roadmap to play out the day, hopefully on a profitable side. All right, so here's a quick look at the NQ futures with our major levels. I took the pressure thresholds off here just to clean up the chart a little bit. We gapped down from the 8/8 level, which had been containing price for the last 2 days, and we rotated down here to the 6/8 level. 3,046 is going to be the next area of interest, and there's a real big area coming in just below that, which is where the static trend line coincides with the 50 DMA. That's going to be coming in at about 3,032, 3,033. That's going to be a very important level for the market if and when we reach that. To the upside, obviously today's high is going to be important, about 3,099 or 3,100, and above that, when we get into that gap, then that 8-ace level at 3,125 is going to come into play here. Okay, now taking a look at the key market internals. Here's the put call ratio. Let me just move this label so you can see it. Here's the put call ratio. The put call ratio definitely took a spike to the upside, closed at about 1, but it's well below that threshold of about 1.25 to get that climactic reversal. We had one back here in June that kind of buoyed the market and then started this last run back to the upside, but we're nowhere near that that threshold as of now, so we've got quite a bit of room to run before we hit into that. All right, now here's a very key internal. Here's a look at the cumulative advanced declines. The New York side is still well below the threshold here as far as breaking out. We all know that. I think the important factor here is that it's definitely still within this recent trading channel, which is the one small thing that the bulls can point to. We're not rolling over here as far as the cumulative advanced decline line. We're still within this lateral range, so that's a small positive. Going down to the NASDAQ side of the market, this is the NDX side. The NASDAQ side is definitely picking up speed to the downside. We saw relative weakness in the NASDAQ side today. A lot of the high beta stocks were kind of under assault. We had a short in Google and some of the other high flyers that closed at or near the day's low. So definitely keep an eye on this level. We're going to have some support if we get back into this area, but that's not really what this chart is about. This chart is really about the overall design, the overall bias. The overall bias right now is down on the NASDAQ side, and pretty aggressively so. So we have to look here at the New York side to see if this level gets broken. If this level gets broken, we're going to wind up picking up some pretty serious momentum to the downside in the overall broad market. Here's a look at the 10-day trend. The intraday trend closed at 2.65. That was good enough to elevate this level up fairly significantly. So you can see this has a very positively sloped line here, but we're still below the 1.35 reversal threshold. So until we record that 1.35 close or higher, there's still gas in the tank here for more downside action in the market by this measure. Here's our classic risk on, risk off measurement right now. This is the S&P divided by TLT ratio. You can see that we broke this regression channel. This is where the comfort zone is. This is where, when we're riding up along this, folks are putting on risk in favor of equities over the safety of bonds. Right now we're seeing just the opposite. When this ratio is declining, we're seeing risk being taken off of equities and flowing into the safety of bonds. For now, that is government bonds. So for now, we're still breaking to the downside here, and this is a very notable break, and we're getting some good distance below this regression channel low. Here's a look at the multi-sector daily chart. And as you can see here, all of the major indices were lower on the day, even the XAU. So there's really no flight to safety or flight to quality today, depending on how you want to look at it. The SOX, the BTK, and the BKX were all lower on the day. We all have these rounding tops in place here, so obviously you can see that this chart is starting to come together. You can see how gold was outperforming so greatly here a ways back, and then the risk-on equities really started to interact and really started to catch on. Right now we're starting to see potentially just the opposite. We've really got to break above this key area here, which is resistance in the XAU. If we break that out, we could easily see convergence again here in this multi-sector daily chart. So got to stand by here. I expect that we're probably going to see a little bit of a better bid in the gold shares. I think today was kind of the initial reaction to the downside, where they just kind of canceled their bids and everything except for government bonds. So we'll have to see how this plays out. All right, so here's a look at the TLT, which represents the government bonds. We're definitely above the 10 EMA, which puts us short-term positive, but we're still intermediate-term negative and still within this overall longer-term downtrend until we take out this 50 DMA, or at least this prior high watermark here at about 107.75. If we do take that level out and can continue to the upside, then this 4/8 level at 112.50 will come into play. But that remains to be seen. For now, we're solidly 3 days up. Here's 1, 2, and 3. Oftentimes on the third day up, that's when you start to see some profit taking. So tomorrow's going to be a key day. If we start to see some profit taking, we'll probably see a better bid in equities. But if this does rocket up and start to interact with the 50 DMA, that's going to be the indication here that we're still in the midst of a momentum move to the upside here. Keep in mind that as of today's close, we're only 3 days up in the secret count, so there's a lot of room to go before we get to 9 bars up and have any potential problem with a setup phase in the seeker tool starting to put a little resistance on the market. So we're not there yet for sure. For now, set to see if we can break out of this little this downtrend. This has definitely got potential. But we have to see the whites of their eyes and keep track of the bar count here on the seeker. All right, now here's a look at the gold futures. This is the oil futures. The oil futures had a really big day, up about 3% or so. Really big move to the upside here. We had this 1 through 13 exhaustion countdown phase set up, but keep in mind it was lateral. This 13 right here is actually lower, I believe, than the 1 bar count. So this is really just a lateral count and really just counting time rather than price to the upside. So there's no extension to the upside. This risk level is going to be key. It's also coming in about where the 7/8 level is on the Murray Math box, and if we take that out, then we're going to put this 112.50 area into play, which is 8/8. Prior high, if we go back a little bit further into the weekly time frame on this chart, you're going to see the previous high is going to come in here right around 110 3/4. So that's going to be a potential pivot, and you can see the cup and handle type of construction here on the weekly chart. So this is going to be a big area here, 110.50, and if we break that out, then we're going to be looking at the at this 112.50 area here on the daily chart. All right, so here's a look at the sectors on the day. The utility index was the top gun. The XOI, which is oil, definitely outperformed the broad market. The weaker sector was the XAU, which got hit very, very hard late in the day. The airline index was very weak, no surprise there. The BTK was also weak, which is really okay at this point because there's been a lot of profit taking in the BTK. Tends to be one of the earlier sectors. The BKX, however, was very, very weak. And even though it is an earlier sector, that in combination with the transports being so weak is definitely a cause for concern. And the semiconductors were much weaker than the overall market as well. So today, all in all, it was a pretty weak day. You can see the counts here, and you can always pause the video if you want to get a little better look at the countdowns for either the seeker right here or the Comer. But you can see that we're definitely into some deeper counts in a couple spaces. But I think the one thing to keep in mind is if you refer back to the video earlier this week, there are a lot of 13s popping up in the weekly time frame for the major averages. All right, folks, we'll run a little bit late here today, so that's going to be it for me. As always, thanks for listening, and this has been Rich for Tradesight.